Well, in this business, we need to kind of look at this stuff again. Do y'all remember what this is? These are $100 bills for you in the back. What we want to do is help you make a lot more of those. Our focus is going to be helping to make more of those, and let's see what we can do to move us closer to making these. Let's talk about what's going on. First, I'm going to keep the message very simple, and I hope you do too. And second, we need to take a leadership position in the market and say, now is the time to come back to the market to sell your house or buy a home. And is it okay to come back? Sounds like from Key West, it's okay to come back, right? And absolutely. And we need to be firm and positive as we discuss what's occurring in the economy. So where are we? Well, let's take a look. I believe there are some folks who are still confused, in some instances, hesitant to do anything in the market. Would you all agree with that? Right? We need to ask them to turn their televisions off. Would that help? Or the radios, either one. Because if the folks aren't confused, they're going to come back to the market. However, this thinking has improved over the last year, and buyers are returning to the market. Pent-up demand has been building in the past and beginning to push through the noise, which is really great. People just have to buy. They've got to push through the noise, and that's good. Now, our industry is one of the major engines of the U.S. economy. You all knew that at the end of next month, they're going to drop the $8,000 benefit for first-time home buyers. Maybe. Don't know. Still talking. It could continue, it may not. But interest rates are lower. Right now, the 30-year mortgage is around 4 3/4. The 15 years down to 4 1/4. The 10-year bond is running anywhere between 3.2 and 3.5. Yesterday, it was down slightly. By the way, why is that important? That we track the 10-year bond? Who knows? That's what we tie the mortgages to. It's not the prime. It's the 10-year bond, and people are watching that. And it's going to stay that way for a while. Liquidity. That is still the major issue. The economy is kind of stuck because of liquidity. As the stock market works its way higher, the attitude in the private sector is more bullish, and some cash is now available to pay down the debt. How many folks are over-leveraged? You don't have to raise your hand, but I'm one. I'm over-leveraged. 12 years ago, I had no debt. Now I have debt. Because we have to do what? We have to pour money back into our business in order to sustain it with what's going on in the economy. And I'm not the only one that's highly leveraged. There are probably many of us in the room that are. But what happened to the market yesterday? This isn't one of the slides, but it closed up at over what, 10,000? Yep. I don't know if you read my newsletter, but about 5 months ago I forecasted it would probably do that before year's end. And it worked out. However, I do not have a forecast for where it's going from here. I've got some thoughts, but I can't. Housing prices are moving upward, and equity is being established. Again, finally. For a while, because of short sales and foreclosures, we didn't really find the bottom, but I think we found the bottom now. And because of that, we found the bottom. Now we're having some increase in equity, which is good. And why is that important for the buyer to know that? All these things I'm sharing with you are supposed to be positive items that you can give to your buyers and sellers. They may say, gee, I'm not sure I want to buy, I may not want to sell. And you say, well, why not? Well, I'm confused about what's going on. My confidence in going in the marketplace is low. And say, well, here's some ideas that might help you to get it to come up. And so people may not know that waiting to purchase may cause a higher price on a comparable property. And interest rates are close to the bottom right now and may start to inch higher. So there's 2 reasons to buy right now. And next is inflation is flat and should not start to rise until 2010. However, the last slide I'm going to talk to you a little bit about inflation and what's going to occur. China is still buying our debt, but the trend is slowing and the dollar is losing value. You've probably seen in the news that they're talking about the dollar no longer being the reserve currency in the world. Don't believe it. Who's still the 800-pound gorilla? We are. We are, right? And if you look at any other economy in the world compared to our economy is still the strongest and still the largest of any economy in the world. Right now, that's just chatter, all right? Gas is around $2.40 a gallon. Why is that important for us today to talk to the consumer about that? They don't think about it, but why is the price of gasoline important?
It was over $3 a gallon for a while.
Well, it was over 3, it was over 4, but what does that help them have? That helps them to have discretionary money in their pocket. Right? When it used to cost you $40 or $50 to fill up, now it's costing what? 28 to 35? depending on the size of the tank. So that sets up a positive influence in the consumer's mind that they're not spending as much money and they have a little bit of extra cash. This is interesting, though. Banks are still not lending to consumers, but they're willing to release funds for capital improvements for corporations. And that's just starting on the capital improvement side, but far as a bank, not mortgage companies, but I'm talking about a bank. If as a consumer, you'd say, gee, I need to borrow some money. The banks are real tight on loaning the money. I don't care how good your credit is. I don't care if you back it up with securities. What they really look for is the ability to repay. And if you don't have a great number on the ability to repay, they'll just say, well, just wait a while. We'll wait until the economy turns around and you have that ability to repay. So that is limiting the purchase items of what? Washers and dryers and big ticket items, cars. It's having an influence on some of the big ticket items. Sellers and buyers as a whole, however, are more flexible than they were a year ago. A year ago, they were hesitating. Now they're not doing that anymore. They're helping out. Now, there's absolutely no reason not to buy or sell. Unemployment is 9.7% and continues to rise. They're going to talk about unemployment being high. But if unemployment is 9.7%, what is the employment rate right now? It's what? 90.3. That means 90% of our people are employed, which means they have incomes, which means they can buy things. They can do things. Now, this is going to continue inch higher. It may break over 10%. Layoffs will continue to rise. But they worry about that. Why? Because they may be one of them, except in your market where the folks have some sort of retirement and they're kind of hanging on to that, even though their 401ks may be less in value. That it has come back up. When the market bottomed out at 6,700, it's now back up over 10. About half of the money they lost has been brought back. So they're feeling better. All right. Those who benefit, those who had benefits, those benefits have expired and they're not reporting the figures. The number of people that are underemployed and unemployed are probably close to 16 to 17%. But that's okay. That's all right. We just need to know that. The recession is showing some faint signs that we may be turning upward. We may see growth beginning in 2010 overall. Foreclosures and short sales will be with us for the foreseeable future as unemployment inches upward, but it's doing what? It's inching upward. Remember, unemployment used to be at what, 4%? Right? It's now 9.7. That's a huge jump in a short period of time, but the unemployment that will be occurring will be inching up at a slower pace, which means it's not going to have the detrimental effect on us. We're going to be able to handle this.